Welcome back, everybody, to another deep dive. And today, we're taking a look at some new IRS regulations
Oh, yeah.
that are making waves, shall we say, in the world of decentralized finance.
The waves.
DeFi, yeah. And to help us navigate these choppy waters, we have an expert joining us.
Hello.
Welcome. Welcome. So let's just jump right in for folks who might be new to this. What exactly is DeFi, and why is it such a big deal?
DeFi, decentralized finance. Yeah. It's all about removing those traditional middlemen, the banks, the
Okay.
broker.
Gatekeepers.
Yeah, exactly. And by cutting them out, DeFi aims to give folks more direct control over their assets.
And potentially bigger profits.
Well, that's the hope, right? It's a pretty enticing proposition.
Absolutely. But of course, with any new financial frontier comes new challenges. And that's where the IRS enters the picture, right?
Oh, yeah. The IRS, they don't mess around.
No, they don't. So what are they cooked up that has everybody talking?
Well, they've just released final regulations published in the Federal Register, and let's just say they're shaking things up.
So these regulations are aimed at DeFi specifically.
That's right. They're really trying to figure out how to apply existing tax laws to this new and rapidly evolving space.
I imagine that's no easy feat.
Not at all. It's like trying to fit a square peg in a round hole.
Okay, so what's the biggest sticking point? What are the key takeaways that folks need to know?
Well, the million-dollar question is who needs to report these DeFi transactions to the IRS? And it all boils down to their definition of a broker.
Ah, the broker. That's the classic middleman in traditional finance.
Right. And before the Infrastructure Act, that term was pretty broad. It could include anyone who facilitated a trade, even if they didn't hold any assets themselves.
But DeFi is all about cutting out those middlemen. How do you define a broker in a system that's designed to be decentralized?
That's the challenge the IRS is grappling with, and it seems they've landed on what are called trading front-end service providers.
Okay, trading front-end service providers, what exactly does that mean?
Well, think of it this way. In the old days, if you wanted to send a telegram, you could learn Morse code yourself and manually tap out the message.
Right, but most people would just write out their message and let the telegraph operator handle the translation.
Exactly. And that's kind of what these front-end service providers do. They make DeFi accessible to the everyday person. They translate your instructions into the code that actually executes the trade on the platform.
I see. So instead of calling up your broker to buy stock, you're using one of these services to navigate the often complicated world of DeFi protocols.
Precisely. And the IRS is saying, hey, if you're making DeFi user-friendly, you've got to play by the rules too.
Okay, so why not target the DeFi platforms themselves?
Well, that's where things get interesting. The Bank for International Settlements has developed a helpful model for understanding DeFi. They break it down into 3 layers: the application layer, the protocol layer, and the settlement layer. Yeah. DeFi platforms themselves fall under the application layer. They're like the engines driving the trades, but the IRS is focused on that interface between users and the platform's that translation layer, if you will.
So they're targeting the access point rather than the core technology itself.
That seems to be the strategy, and it could have major implications for the entire DeFi ecosystem.
That leads to the question a lot of folks are probably asking: is DeFi essentially becoming more like the traditional financial system it was designed to move away from?
It's a valid question, and one that's generating a lot of debate in the DeFi community.
On the one hand, it seems like we could see a lot more mainstream integration with these new regulations.
Right. These service providers will likely have to implement know your customer procedures, or KYC.
KYC, yeah, that's a familiar term from the traditional finance world.
Which means collecting personal information like Social Security numbers.
So needing to provide your Social Security number just to swap some tokens, that's a pretty big departure from the early days of DeFi.
It is, and it has a lot of people concerned about the future of privacy and anonymity in this space.
Not to mention the potential for increased surveillance and government overreach.
Right, there are definitely some valid concerns there. But on the other hand, increased transparency and accountability could attract more institutional investors and mainstream users who might have been hesitant to dive into a largely unregulated market.
So it's a trade-off, more oversight in exchange for wider adoption and potentially greater stability.
Exactly, and it's a trade-off that the DeFi community is going to have to grapple with.
This whole situation really highlights the tension between innovation and regulation.
Absolutely. It's a classic dilemma, and one that we're going to see play out again and again as DeFi continues to evolve.
Well, it's certainly a fascinating time to be watching this space unfold.
No doubt about it. And we're just getting started. There's a lot more to unpack here, so let's dive into some of the specifics of these regulations and what they mean for the average DeFi user.
Excellent. Lead the way.
Well, for starters, imagine logging into your favorite DeFi platform and bam! a pop-up asking for your social security number.
Ooh,
Yeah, and other personal details.
so much for anonymity, huh?
Pretty much that's likely to become the new normal.
Wow, so what else should users brace themselves for?
Get ready for way more detailed reporting on your transactions.
Oh, really?
Yeah, they're going to be tracking the types of assets you're trading, the amounts you're moving, even the specific wallets you're using.
It's like they're trying to shine a spotlight on every corner of the DeFi space.
Well, they want that clear picture, for tax purposes.
It's like DeFi is being brought kicking and screaming into the traditional financial system.
You could say that, and, some folks see that as a good thing.
Really?
Yeah, they argue that this kind of oversight is necessary for DeFi to mature,
I guess it makes sense more transparency and accountability could attract bigger players like institutional investors.
Exactly. Folks who might have been hesitant before, when it was like the Wild West out there.
Right. It could make people feel more comfortable knowing there's at least some level of regulation.
Exactly. Foster a sense of legitimacy and trust.
And that could lead to wider adoption and maybe even more innovation.
Potentially. But of course, not everyone's thrilled about this shift.
Yeah, I imagine the diehard DeFi folks aren't too happy about Big Brother breathing down their necks.
Yeah, they feel like this goes against the whole ethos of DeFi. The decentralization, the individual empowerment.
It's like the IRS is trying to fit a square peg in a round hole.
Yeah, that's a good way to put it. And they're facing some pushback for sure.
So how are they navigating this, this tension between the need for regulation and the desire for freedom?
Well, they acknowledge the concerns in the Federal Register document.
Yeah.
They talk about the potential burden on DeFi businesses.
Especially the smaller players, I bet.
Right. And they even recognize the privacy risks that come with collecting all that user data.
But at the end of the day, they still believe that the need for information reporting outweighs those concerns.
That's their stance. It's all about maintaining a fair financial system and ensuring tax compliance.
So basically, if you want to play in the DeFi sandbox, you got to play by their rules.
Pretty much. But there are still a lot of questions about how these rules will apply in practice.
Yeah, like what about all those other activities in the DeFi ecosystem, like staking and providing liquidity to pools? Those are pretty core features.
Right. Those are more nuanced, and the regulations don't really address them directly.
So where does that leave folks who are involved in those activities?
Well, that's where Notice 2024-57 comes in. It offers some initial thoughts on how those activities might be treated for tax purposes.
So it's not a definitive ruling, but more like a heads up that the IRS is watching, and they might issue more specific guidance down the road.
Exactly. Stay tuned, folks. The story's not over yet.
Okay, so we've talked about the potential benefits and drawbacks of these regulations, but let's get into some of the specific criticisms that have been raised.
You got it. One of the biggest points of contention is that whole definition of a broker.
Right, the critics argue that the IRS is stretching that term way too far to include all sorts of DeFi players who don't really fit the traditional mold.
Like holding the encyclopedia responsible for what you learn from it.
Exactly.
Yeah,
It's like
yeah.
they're trying to force this decentralized innovative space into an outdated regulatory framework,
And they worry that this could set a dangerous precedent,
like a slippery slope that leads to even more regulation down the line.
Right. They fear that it could stifle innovation and ultimately undermine the very essence of decentralization.
It's a clash of ideologies, really. The IRS wants control, and the DeFi community wants freedom.
In a nutshell, and it's a clash that's likely to continue as DeFi evolves and regulators try to keep up.
So what does this mean for the future of DeFi? Will it become more mainstream, or will it drive users to less transparent platforms?
Tough question to answer. We're at a real crossroads here.
It seems like there's potential for both greater adoption and greater pushback.
Exactly. It all depends on how these regulations are implemented and how the DeFi community responds.
Yeah, it really does feel like we're at a fork in the road here.
It does, and it's hard to predict which path DeFi will take. Will it become more mainstream or will it go further underground?
Well, on the one hand, you have this potential for DeFi to finally, break through to the masses,
Right. If it becomes as easy to use as online banking, that could be a game changer.
especially with the potential for higher returns and more control over your assets.
Exactly. It could really appeal to a whole new audience.
But then there's that other side of the coin.
Yeah.
The risk of alienating the early adopters,
The OGs of DeFi.
right? The folks who are really passionate about decentralization and privacy.
They might see this as a betrayal, like the spirit of DeFi is being compromised.
So how do we reconcile these competing forces? Is there a way to strike a balance between regulation and innovation?
That's the million-dollar question, isn't it?
It is. I mean, ideally, we'd have enough oversight to protect consumers and prevent, illicit activities.
Right, but not so much that it stifles creativity and experimentation.
Exactly. It's like finding that sweet spot where you can foster trust and stability without crushing the soul of DeFi.
And it's not a one-time thing either. DeFi is constantly evolving, so regulators need to be flexible and adapt their approach as needed.
It's a dance, really an ongoing negotiation between these two forces.
I like that analogy, the regulation innovation dance.
So at least they're dancing, right? At least the regulators are engaging with DeFi rather than trying to shut it down completely.
That's a really important point. It shows that they recognize the potential of this technology and they're willing to work with the community to find solutions.
And who knows, maybe this increased regulation could actually be a good thing in the long run.
How so?
While greater transparency and accountability could attract institutional investors, the big players who've been sitting on the sidelines until now.
That's true. They've been hesitant to get involved in this unregulated space.
But if they start pouring money into DeFi, that could fuel a whole new wave of innovation and growth.
It's like a catalyst. More adoption leads to more development, more use cases, and ultimately a more robust and accessible DeFi ecosystem.
So maybe this is the push DeFi needed to really go mainstream.
It's certainly possible. There are definitely challenges and uncertainties ahead, but there's also a sense of optimism.
It feels like we're on the verge of something big, something transformative.
I agree. This is a pivotal moment, and the decisions made now will shape the future of finance for years to come.
Well said, well said. And for our listeners who are eager to dive deeper into this topic, we'll be sure to include links to all the relevant resources in our show notes.
Yes, definitely check out the full text of the IRS regulations notice 2024-57, all that good stuff.
And remember, this is just the beginning of the conversation.
Yeah.
DeFi is a dynamic space, so stay informed, stay engaged, and most importantly, stay curious.
Couldn't have said it better myself. Keep exploring, folks.
This has been another fascinating deep dive. Thanks for joining us, and until next time, happy trading.